What up?
Hey guys, you probably already know me by now. Brian Rohan, I'm the principal of the Rohan Law Group PC, and we are
The trusted transactional titans.
And as I suggested to you guys before, very quickly, 35 years practicing in the media capital region. We are a firm, a small boutique firm that we focus on transactional law, residential and commercial real estate planning and administration, and business law. And we are a trusted, experienced law firm. And I think that you deserve that. You want personable, responsive service. Look no further than our firm, guys. You just can't do better. Now today, what am I going to talk about? We're going to talk about, we talked about earlier, the inspections contingency. And for those of you who have already seen it and thoroughly enjoyed that rendition, was it Oscar worthy? Yeah, probably. I know a lot of people say it absolutely was. But for you poor people that waived inspections, didn't have the opportunity to see it, I mean, I feel bad. I feel bad for it. I mean, we make it available to you if you'd like, but you don't have to see it. But today we're going to talk about the mortgage contingency, which is arguably the second, I don't know if the two most important provisions in the contract, inspections and mortgage. The inspection or the mortgage contingency provision is at paragraph 5B, financing contingency of your contract. Okay, now in that provision, you're going to see a date certain, okay, at the bottom corner of that provision. And that's the date by which all eyes are going to be on you as the buyer. We're going to be looking for you to advise. Can we let that provision lapse, expire, fall out of your contract or not? If for some reason, do you require an extension of that provision? Okay, so when that date arrives, you're going to get an email out of my office from our paralegals. And it's going to say, hey guys, just following up. Are you ready? We see your mortgage contingency is expiring. Can we allow that to happen? And we do look to you for the answer, okay? Because don't forget, your mortgage is going on over here in left field, and we have absolutely nothing to do with it. That's between you and your mortgage loan professional. So you should be in constant communication with your mortgage loan professional and know exactly where your financing stands at any given moment. And I tell my clients, expediency and diligence are your best friends when you're dealing with the bank. They're going to ask you for all kinds of good stuff between now and closing. The faster that you can compile and get them what they request, the better. You do not want to be the reason, at least in part, that yet another extension of the mortgage contingency is required. Because each and every time we have to ask for an extension in writing from the seller's counsel, you run the risk that on this particular occasion, the response coming back is no. We are not granting any further extension. Please consider the contract to be canceled, null, and void. And the seller does have the power to do that under paragraph 5B of your contract. They could kill the deal. If that happens, it's over. And any and all monies you poured into the transaction leading up to that date, inspections, title search, appraisal, or otherwise, gone. You're not getting it back. The only thing that you would arguably be entitled to recover, your good faith deposit under the contract. Okay, so you got to move that along. It's very important that you move the mortgage contingency along the best that you can so that we don't have to look for a million extensions. Okay, now the only caveat to that is going to be your appraisal. Okay, now I know there are mortgage loan professionals out there that may instruct you, and I suppose properly so. They say, hey, listen, it's the time of year where a lot of deals are going on. Professionals, the inspectors, the appraisers, they're busy. Their calendars are filling. They are planning family vacations. Hey, you know what? We should order that appraisal right now. What's your credit card number? I tell my clients, you do not want to order that appraisal until you see how your inspections go. Okay, so let's get by the inspections that we talked about in the prior video first, until you're entirely pleased with the inspection results. Either they went fabulously well right out of the gate, or we had to negotiate and we arrived at a compromise or disposition that you're pleased with. As soon as they're in your rear view mirror, that's when you should place the order for the bank appraisal, and do it very promptly. that's when we'll also place the order for the title search, because we don't want you out of pocket for either one of them if for some reason the deal falls apart under the inspections contingency. We don't want you to be saddled with a bill, okay? So it is important, once you're happy with the inspections, we move on those things, okay? Now, for the mortgage, when you get your commitment letter from the lender, I want to see a copy of it. Okay, now I do tell my clients, hey, listen, I don't review commitment letters. I'm astute enough to know not to immerse myself into the middle of my clients' financial decisions. Okay, nobody knows better than you do what you're reasonably and comfortably able to afford. And whether that commitment letter, once you've examined it, does it contain the terms and conditions that you were expecting, the terms you discussed in some detail with your mortgage loan professional. Okay, because at the end of that commitment letter, and it'll be 3, 4, 5-page letter, at the end there'll be a signature line for you, and you'll sign it and date it. And by doing so, what you're doing is you're acknowledging to the mortgagee, your lender, that you've examined it and that it complies with the terms and conditions you were expecting, and you're pleased and you're ready to move forward. When you sign off on that commitment letter and you return it, probably scan it and email it back to your lender, copy us in on it. Okay, we want to see a copy of it as well. Okay, and the only reason we want it is because of that date that we already talked about that's incorporated into your mortgage contingency provision, paragraph 5B. Okay, we want to make sure that when that date arrives, that at a very minimum, we know you got a commitment letter, right? So you got to have it. Okay, now, when that date arrives, again, we're going to ask you, can we allow this provision to come out of the deal or not? And that's not an insignificant contingency, right? Because it says, hey, Brian, if I don't get the money, I can't buy the property. That's true all day long. Why would I ever want to get rid of that contingency? Why can't I ride that bad boy through the closing table? And I say, boy, wouldn't that be great? Here's the problem. It's a contingency, right, to your obligation to move forward and complete the deal. So you're telling the seller, hey, seller, I'm not locked in here yet. Still got a way out. And they say, oh, yeah, man, I'm very well aware of that. You better wrap that up, because if you don't have the financial wherewithal to complete this purchase, I'm going to kill this deal and I'm going to find somebody else who does. Okay? And as I suggested, they have the right to do that under the contract. So it's imperative that you move that contingency along, as we've already discussed, albeit with the caveat relative to the appraisal. Okay, so very important. Now, when we ask you if you need the extension, there are some mortgage loan professionals out there, and thankfully not a lot here in the immediate capital region. The mortgage loan professionals are excellent as a general rule in this area, which is great. Okay, they're knowledgeable, they're on top of it, and they're very cordial and easy to work with. Perfect. Now, I know a lot of you are going to be doing your online mortgage loan shopping, and you're going to look for an online bank that has no presence in the immediate capital region, or maybe you're dealing with a lender out of another area of New York, you know, Rochester, Westchester County, Long Island, New York City, wherever. I will caution you that, you know, I've been doing this for a long time, and I find that these online lenders and or out of the area lenders who have settlement agents, banks, attorneys out of the area are not as responsive as we'd like to see. Their fees are generally much higher than we'd like to see. So these are concerns. Not to mention the fact that you saddle my poor paralegals with much more work, because they tend to have to redo the closing disclosure statement and educate the settlement agents from out of the area as to how we do things in the immediate capital region. So it's much more difficult. So, you know, hey, I'm not going to tell you not to use them, and hey, people have had very good relationships and transactions utilizing somebody out of the area as well. But as a general rule, I can just tell you, I would strongly urge you to consider local lenders for that purpose. Now, getting back to, you know, when you have to make that decision, okay? I tell my clients, I do not make the decision for you. I don't tell you, yep, you're good, man, release that mortgage contingency. What I do is educate you I give you the information and the variables that you need to take into account in order to arrive at your decision. Okay, but the decision is yours alone to make. Now, there are some mortgage loan professionals that are of the erroneous mindset that the issuance of the commitment letter is the end all. Hey, why is your attorney even asking you if you want to extend the mortgage contingency? You already got a commitment letter from us. You're all set. Get rid of it. And my response to that is, hey, mortgage guy, stay in your lane. All right? The mortgage professional's job is to get you approved for financing through their lending institution. So what they do is they hold your hand and they make sure that you fully and properly complete the mortgage loan application, and they solicit from you any and all ancillary documentation or materials that the underwriters are going to want to examine in order to make a determination as to whether you're a good and acceptable risk, if they're going to give you the money. Okay, so they will ask you for W-2s, 1099s, pay stubs, tax returns, bank statements, investment vehicle statements, whatever. Okay, once the underwriters review everything and they say, yep, issue them a commitment letter, they look great, the mortgage loan professional has largely completed their task. Not entirely. They're going to still be in the transaction through the closing table, maybe look for updated bank statements, pay stubs, whatever along the way, and you're going to want to bounce inquiries off them at different stages to see where your financing stands overall. But they're largely out of the picture. Okay. Now my role, completely different. I need to protect you and your good faith deposit under the written contract with the seller. And guess where that mortgage loan contingency appears? In my contract. Okay, so I need to know when you want to release it, but I want to make sure that you don't prematurely release that contingency. Okay, again, you don't want to hang on to it too long. I have some clients who, we're almost at closing. There's absolutely zero concerns. I say, geez, Brian, can I one more time? Can I extend it just a little bit further out? And I say, hey man, you can do whatever you want. I just want to make sure you understand. Don't forget, seller can kill this deal. So I don't know why you want to open that window, but I would strongly urge against it. I think you're good, right? Now, the factors that I think you consider, whereas a mortgage loan professional, and there's very few that take this position, quite frankly, but it happens, so I got to talk about it. They say, hey, commitment letter's the end all, you already got it. And I'm telling you, that is not the end all, okay? You are 1/3 of the way to the finish line, okay? And what I mean by that is, yep, issuance of the commitment letter you signed off on, you're happy with, great. That is one of 3 hurdles that I want to see you get over before you should be entirely comfortable to remove that contingency and move forward. Okay, so it's receipt of the written commitment letter. The second one is satisfaction of the conditions as incorporated into that commitment letter. And more specifically, at the back end of that commitment letter, there's probably a small laundry list, bullet list of conditions that are unique to your specific transaction. You need to go to that laundry list, familiarize yourself with those terms and conditions, and you need to start knocking them off with your mortgage professional. And when you get to a point where any condition that you had any pause or concern about, like, geez, I don't know if I can satisfy this condition. If you have anything like that hanging out there, then we got to keep the mortgage loan contingency alive until you're comfortable that you've satisfied it, okay? And most of the time, those conditions are going to be fairly straightforward, like, hey, we're going to need updated documents like I alluded to earlier. But once in a blue moon, you get a curveball and you start looking at those conditions. It says, wait a minute, it says I got to pay off my truck, or I got to pay off these 3 credit cards. Where's that coming from? Nobody talked to me about any of this. It's probably what happened was in underwriting, when they were trying to arrive at the debt to income ratio analysis, they said, well, boy, they're really tight. I don't know if we want to give them the money, but the debt to income ratio is tight. Oh, I know what we can do. Looking at this credit report, we'll just have them pay off this or pay off these, and they look great then. Okay, so you may look at that and disagree. You say, wait a minute, I don't want to do that. Nobody told me. So obviously that's going to have to precipitate a discussion between you and your mortgage loan professional, right? And potentially a revised commitment letter to be kicked out. And quite frankly, you should be looking at those best case scenario before you even sign off and date the initial commitment letter saying I agree to these things. If you go through that and you see anything in there, including the conditions, you say, wait a minute, I don't know that this was what I agreed to. You need to have those discussions with the mortgage loan professional and potentially get an updated or revised commitment letter for your execution before you move forward, okay? But you need to satisfy conditions. So that's hurdle number 2,